Hi, everybody. This is Gary Dean, and this is our nightly video report for Wednesday, April 13th, 2016. So let's get started. The Bulls decided to add to yesterday's move. Kind of frustrating to watch. It kind of, you just sit there and scratch your head because each time I think that the Bulls are going to take a breather after this nonstop run, they find another breath and they keep going. And it's frustrating, but the thing is that from our previous highs, the S&P is, I think, 5 points higher. So yeah, it's frustrating to watch. It's probably washing out every bear that's out there because nobody thinks it's going to go down. But we've had a 42-point rally off of the lows, and may even been up more than that, and we're 5 or 6 points higher than the previous high. So that's like the frustrating part of it, but this is where people, they jump out, and like I said, we're as overextended as I've seen since this rally started in 2009. And I know that's crazy to say, but as far as with these breadth indicators, they've never been at these levels. If we take a look, hang on one second, I just want to move that. Okay, so if we go down, and now we're going to take this is the VIX. These bullish divergences on the VIX is saying this is coiling, and at some point it's going to pop up, and when that pops up, we're going to see the indexes come under pressure. Maybe they hold off for another 5 days and we kind of chop up and down, but again, this is not where you want to be comfortable on the long side. You actually want to be defensive. And, overall, the low price has not reacted to any of this. So, like I said, I feel like it's a broken record each time I say this, but it's still, even though we're not making any, serious moves to the downside, it doesn't make the environment safe to buy. Just looking at the put-call ratio, even though we had this big move up here, we had zero price movement here. Now we backed that back down again, and this is now the second time we've done that. And again, it's just not it's not a safe environment when you see that kind of stuff. And the next one is the bullish percent. You can see this kind of leveled off here as we're making the new highs up here. So it's just at levels that I don't know how sustainable it can be. I've been wrong because I keep thinking that the bulls are going to have to come up for some air and get at least a 23 or 38% retracement off of the lows. But they've, continued to push higher. Reasoning wise, that's the part that's kind of you scratch your head because they've been rallying off a lot of these central bank stuff, but you're kind of, scratching your head saying just because the Fed isn't raising rates 4 times and they're only doing it 2 times, what is that actually doing? It hasn't really changed anything. But now that the indexes are up at these levels, I'm pretty sure you're probably going to start hearing these Fed people come out and start saying that, we need to do 4 cuts. And they're really basing all of this. It has nothing to do with any of the data that they're following. It has to do with where the stock market is. And if it's down, they say they're not going to raise them. If it's up, then they say they're going to. So we're probably at a point that they're going to start saying they're going to raise it 4 times. And that's really about it. So like I said, the breadth indicators, there's not a whole lot of room to move more on the upside, but yet price keeps going. So yesterday we had the big move off of the lows where, things looked like they were going to you're going to get that, nice pullback, which is well deserved. We had oil, that rumor about Russia and Saudis freezing production, which as of now is a rumor. We saw oil spike up. Today we saw oil down 1.4%, and the index bulls just forgot all about that and continued higher. So again, yesterday's move for the big rally, right now oil's not really following suit on that. So if we go to our regular charts, this is what I was talking about. You have the highs that we made on the first were at the 2076. We are at 2082. It's 6 points, even though it felt like it was the most pain throughout this entire rally. this is it. And typically when you get these gap ups towards the end of a very extended move with bullish divergences, they're your exhaustion moves. And when they, we're running right into resistance, where that's what I've been saying. I'm not sure if they have the energy to push through it, because they're at resistance right now. And it's crazy because this morning I actually put this fib line at 2082, and that was just because of this resistance right here, and that's exactly where we closed today. But anyway, so we're here. If they push up, you got the channel line that's right at this 20, just say 88 and 90 area. They push above that, they have 2104. They push above that, they have 2120. And then if they push above that, they have this the 2031. So there's so many different resistance areas, and with like I said, the bearish divergences that are in place, very overextended levels and no breaks, it just makes things dangerous. And like I said, price has not reacted to it, so I've been dead wrong on expecting this, but I still think it doesn't make things safe. You can see we've had the bearish divergences running all day. This 2-day spike has brought the momentum back up, and we're still yet to get a full breather in on the 60-minute charts. And what I mean by that is where we come down into the oversold levels here. We got just barely, we haven't even come close to being oversold, and yet we're coming back up. So it's a way, I guess the way to look at it is when you shoot a rocket up in the air, it has that big thrust off the ground. But then when it's up there and it hits the thrusters, it's just going on air, and it just makes things kind of dangerous. And that's why when we make these higher highs here, it's frustrating, but again, not really a safe environment to be jumping in. 15-minute, we had bearish divergences all the way from up. I'm sorry, hang on one second. So we had bearish divergences after this gap up right here, which pretty much was the majority of the move today, because from where we opened was 2076, and where we were was 2082. So it's really, the majority of the move was done when the cash markets are sleeping. But now again, we have bearish divergences on the 15-minute chart as well. Dow right into this resistance zone here. Not sure if they're going to be able to push through it. Bearish divergences. And finally, the Qs still have a ways to go to get into the 78% retracement, so they're still lagging. So right now, I'm not going to say what it would make perfect sense if we rolled over tomorrow. Maybe we chop around into next week, but like I said, this move off of the lows that we've seen without any breaks, it's getting very long in the tooth, and once everybody starts thinking that there is no way that this market's going down, they pull the rug out and we find no buyers underneath, and then the algorithms start chasing over each other to try to get out because there's no bid. So let's see what plays out tomorrow. And like I said, frustrating to watch, but it's still not safe to be buying here. So with that, have a great night, and I'll talk to you guys tomorrow.